figures in the fourth quarter budget implementation report show Nigeria's gross profits from crude oil and gas sales dropped to 1.08 trillion naira in 2024, down from 1.9 trillion the previous year, a decline of 43.3%. The performance fell 26.3% short of government's target of 1.46 trillion. And the report comes amid renewed scrutiny of the remittance by the NNPCL and follows an investigation commissioned by the Nigeria Governors Forum, which alleges significant under-remittance by the company over several years. An ad hoc committee is still examining NNPC's latest submission. And joining us to break this down is Country Manager, Trade Grid, and the Chief Operating Officer, Iona, in person of Jide Pratt. It's a pleasure to have you in. Yes, and a major decline between 2023 and 2024 gross profits from oil and gas. What would you say is to account for this decline?
So thanks again for talking to me. I think that when it comes to revenue, when it comes to profit, the first thing is volume. So if you look at it, let's assume that our crude oil production was constantly on the increase. If the price was also constantly on the increase, then what you would have is that the nexus between both is that we'll have increased revenues, increase gross profits, and technically increase profits based on how we spend. On the contrary, we've had an undulating, and I'll use the word undulating curve in terms of crude oil production. So if you look at it consistently, we seem to be stuck between 1.3 and 1.43. Now, we have had a few instances where we've gotten to 1.5. We've actually gotten to 1.7 if you add condensate. Okay. Now, but if you take that away, it means that these revenues that we're talking about are not consistent over a period of time. So two things need to happen. Production needs to increase. One good thing that we seem to have as a country is that while this has been, and I'll use the word not as good as we would have wanted it to be, royalties seem to be increasing, FDIs seem to be being signed. So what is happening in that bucket is that you have some more inflows coming into the bucket. But then again, when it comes to gross profit, again, it's still a function of how expensive is our crude and how much of it are we producing.
And this is for, this report was for 2023, 2024. Here in 2025, first 8 months, we're seeing production fall below target by, is it 94 million barrels per day? Do you see that same story repeating itself?
I do. And if we got to a constant where at any given time, day by day, we're able to get to 1.72 million, it does mean that on the production side, we're hitting where we should in 2025. But we cannot always control the oil prices globally. OPEC Plus has their impetus. But the truth of the matter is that for us as Nigeria, the first thing we need to do is get to 2 million barrels a day. So that regardless of what happens in 2025 and going forward, revenues, gross profits are on the up.
And I think the question now is what it's going to take to achieve that. We know we have seen a wave of reforms, and you know their claims of, I mean, the PIA sets some of these reforms rolling, and their claims that investments are at what, $16 billion within the sector. But in terms of outcomes, right, are we seeing the impact of these reforms? We can say the reforms have been ongoing for 2 years, right, or plus. Are we seeing the impact? Is it too early to begin to see the impact? And what's it going to take for us to begin to hit those targets?
So sadly, investments and more investment. So if you look at it that we were in a situation where our final investment decisions were not made for almost a decade. Yes. Okay. So what it meant is that we had a lot of conversations, but we were not changing it to capital. So to do this and get to a consistent level, two things must happen. For production to be consistent and constant in terms of going up, then it means that infrastructure in terms of wellheads, infrastructure in terms of platforms, there needs to be more investment over a sustainable period of time. We also must have government policy get to a stage where if a policy is out, for instance, and we say this policy is for 5 years, Joanna, we have to see it through. You can't base it on the party politics. We have to see it consistently. These are the things that will give us this improvement. I think destination-wise, if you look at it now, we're more open to capital and more capital is receptive to Nigeria. And this is because some policies have been in place. Do I think 2 years is a long time? In my personal opinion, I think we could have done better if the first 6 to 7 months were treated at the same pace of the last 10 months. This would be my reaction to that.
So what changed in the pace in the last 10 months?
Implementation.
Okay.
And again, it's implementation. We can have so many conversations. We can point at the things that we need to do. But until someone does it, and again, I speak a lot about what I think Oluwaseun is doing. She seems to be the, and I don't know, I want to use the word, she's not in politics, but she seems to be the one that can tweak the ball towards implementation. So we need ministers, special advisors, House of Assembly, Senate on the same page when it comes to policies for petroleum. And implementation is the only way.
Right. And speaking of policies for petroleum, one policy or proposed policy that has been widely talked about over the past couple of weeks has been that 15% import duty on petroleum products. You have openly called it monopoly in another name. Share with us your thoughts on that.
So let's back up. For a long period of time, we had zero refining capacity as a country. So what has happened after that is that the super refinery has been built. That is very possible. I mean, it's great. But for me, it's a zero-sum game if we're looking at 15% in terms of trying to protect the investment in local refining. And why do I say so? You pile on a 15% price on every competition against that refinery. The PIA is very clear in terms of competition. We deregulated so that it became a free market. Now, if it becomes a free market, then it means that all players should have, quote and unquote, the right to bring in products that are certified at the right quality. And then there's a pricing that is a benchmark pricing for everybody in the space to compete. I think what has happened is that we're giving a 15% to a super refinery that is in a free trade zone. We're giving a 15% to a super refinery that is a single train. So what it does mean is that for energy security purposes, we've scored an own goal. And I'll go forward by saying that once a single train refinery has to close or stop, if there's a 15% tax on importers, then they're unlikely to bring in petroleum products at that point in time. So what does that mean? There's a supply gap. While you want to protect on one hand, it must be in such a way that there's there needs to be a handshake between local refining, import. There just needs to be.
Yeah. So from what you're saying, there's an over-dependence on a single player, and at the same time, we're killing the smaller competitors.
And that is right. So let's back up. Let's not just say smaller. So we've had depots and tank farms for over 50 years. So it meant that at a certain point, they were the warehouses for petroleum products. So look at what you do in cement. Look at what you do in sugar. There's a warehousing. Look at what you do in confectionery food. There's a warehouse. Depots are warehouses for petroleum products. So in the supply and demand game, what you need to do is have vessels put products in depots for effective distribution. And it should never be one source. If a single train refinery has a major issue, what it means is that in terms of production, that drops to about 30 to 40% capacity. We're not yet at 100% capacity. So what I'm trying to say is that a tax that should protect local refining must be done in such a way that it doesn't cancel competition in terms of alternative supply.
Right.
When you talk about energy security, accessibility, affordability, availability, and adaptability, if there's no access to products other than one place, then effectively, again, monopoly has just changed.
So obviously the argument is that we are protecting local industry and that there will be other players who are coming. Bois, although the deadline has been shifting, but Bois, amongst others, are expected to come up. And then it's also been highlighted that some of these other players, importers, have been playing dirty. There has been a lot of irregularity. They're extorting the system. Dirty petrol is being brought in, and all of those allegations. So that is also, I mean, this policy is also perhaps in a way cutting that out.
I'm not so sure I agree with that. And why do I say so? Every industry has a regulator. So if people have been bringing in products that were, number one, substandard, it wasn't their job to bring in substandard. It was the job of the regulator to ensure they don't. We test samples of products before they are birthed. So what am I trying to say? Regulators need to do their jobs. But saying that what we want to do is that we want to protect local, that is fine. But if you protect local and you shut down competition, What it means is that when local decides that, look, I just want to make an arbitrage, there's really no rule or there's nothing to stop it. Customers gain from competition because many people are bringing things into the market. So if I go to A and I don't like A's price or quality, I go to B. If you move on to products, there are also different classes of products. How much sulfur do I want in it? How much is allowed? So if there's a band, it means that while the refinery would always have the best in terms of its Nelson index, the other guys can fit in that range. But the regulator needs to make sure that they're not coming from outside the range with substandard product quality. Finally, in distribution, when you look at it, that the super refinery is in one location. We have coastal waterways in other places. So ideally, what should make sense is that vessels go into those locations. And don't get me wrong, they could decide to buy the vessels from the super refinery, but they could also decide to bring it in because they have depots and tank farms. And then trucks ideally would be used for what you call last mile delivery. This is how you keep so this is how you keep that system away from short supplies. And in my opinion, these are the things we need to be doing. We talk about the Boer refinery. I'm not so sure they'll be ready in the next 2 to 3 years.
Wow.
So if you think about it, that after the super refinery, there is no capacity anywhere else to compete with that. The modular refineries are not in the same boat.
Interesting. So we're trying to create some sort of equal playing ground, somewhat, for all players. But then at the same time, there have been calls, and I know you've touched on this a bit, on how it should be done, the role of regulators. There is that call to protect our own, right? Let's be honest, you know, it's our own refinery in a way. Nigerians have come to see it as their own, and we know what it perhaps could do for the Naira and the economy at large. And it seems like there's a balancing act to this whole thing. You've touched on this a little bit, but I want you to dwell on that as regards the policies that are needed to ensure that we are still somewhat protecting our own, but ensuring it's still fair. Would I say fair competition? I'm not even sure that's the word, but the market stays, you know, stable, and we're not setting the market up for some sort of crisis later on.
And that's an important point you made. So if we dwelled on that, you look at it that while we must protect local, and the aim of that is that so more people go that route. So if I establish a factory locally and I get some form of, let me say some form of favor from the government, it encourages other people to toe the line. That's a fact, and nothing is going to change that. Where I have a problem with this, our policies, is that we're not yet at the stage where we should be reserving or giving to one producer or one party.
You think he has something to prove first before?
Absolutely.
Okay.
And two things is that you need to get to at least 90% production. That's number one.
Okay.
It's not in doubt that that refinery, being a super refinery, can supply Nigeria. But what I'm saying is that if it does supply and you give the reins to just that player, then what it means in terms of GDP, if there are 50 other businesses that were playing in that space, it's a zero-sum game. Because what it becomes is a substitution. Because these other people technically die. Now, so if they're dying, then the question is that if a super refinery comes in and our GDP, for just purposes of the conversation, is 10, and the others together had 8, we're at 18. What you don't want is a substitution where these 8 die, and then he's able to take on 2 more to move it to 12. It's a zero-sum game. You must enable the sector such a way that it's robust enough to encourage all players to bring in petroleum products that meet world standards. And that's what they need to do. If you look at it, they had tank farms for a reason. Everybody tries to make sure that their supply chain is end to end. And that's what the super refinery is also trying to do. But nobody should have an undue advantage at the expense that someone else dies. No.
Okay, so I'm trying to decipher what you're saying here. Is this a good policy but ill-timed? Is it something that we should still consider down the road when, you know, the sector comes to some level of maturity, or it's just a no?
For me, it's a no now, so it's a timing.
Okay.
It's not the time. We have to get to such a time that and I'll put the oil and gas downstream sector, is shock-proof.
Okay.
When we get there, where competition is, I mean, there's still so many things that are opaque. If you went to a website now for the regulator would be of the opinion that because we're now deregulated, there should be no price information. And there hasn't been for quite a while. And I think that that is wrong. You need as much more information as possible out there so people can decipher. People can decide. If you land a petroleum product at any given point in time, the indices you look at ICE, you look at Platts, you look at Eurobob. Everybody knows where these things are. But I think the regulator should also begin to ask from the super refining, what is your exit cost? That way you know whether they're underselling or not. How do you wake up in the morning and say, look, I'm dropping prices by 49 naira? You could, because it's your P&L, it's your balance sheet. But we must have a method to see, are you underselling, are you undercutting the market, or are you just doing this to discourage people from importing? Put it at a level playing field where everybody knows these are the things I need to do to play in this sector. So good policy. It protects and encourages local. Yield time. And then maybe the gravity. You have to do it in such a way that that tax doesn't create 110 naira differential between an importer and it's way too much in oil and gas. We don't make 110 naira margins anyway in oil and gas. So.
Okay, fair enough. Let's circle back to the decline in gross profit for crude oil sales and the wider story here. We know that NNPCL has come under renewed scrutiny when it comes to remittances. The World Bank has had something to say about it. The Nigerian Governors Forum is also calling for investigation. What is happening here?
I think sadly we're still coming to the same boat. When NNPC management was changed, some of us were very happy because one thing happened. You had a high level of professionals between board and management. But that's just one part of the problem. The second part is corporate governance. And these are the things we're talking about. The NNPC as an entity, I'm not so sure can beat her chest and say in terms of corporate governance, in terms of publishing accounts as and when there's transparency that they need to be. You don't decide on a month and say, okay, yes, we're going to remit this month, and then we're not going to remit this month. I don't know who's responsible for the communications on those angles. For want of a better phrase, the NNPC is still a government-owned company, even though the PIA says that they've been privatized. But if the shares that are held by MOFI, Ministry of Finance Incorporated, and Ministry of Petroleum Resources, then effectively there's no private sector participation in that. So technically, what needs to happen is that they need to unbundle the NNPC in a way in terms of shareholding, where there's some private sector participation. That will drive probity. It will drive accountability. And most importantly, it's not going to be business as usual. Again, the gentlemen and ladies who have come into that board and management are stellar individuals. But they're not there for their personal interest also. They're there to run the NNPC, which is quote unquote a government agency. So they must be held to higher standards of accountability and probity. To get there, we need to move some private sector participation into the board composition. That is the only way we're going to drive corporate governance. Else, we're going to keep on hearing.
Where's the money going?
Yeah, you know.
Where's the money going as regards remittances? Absolutely. And I mean, that also takes me back to the super refinery. Do you see, you raised some issues there around data and getting into some of the nitty-gritties within the company. They say they're going to list in the next 1 year or so. Do you see that solving
it doesn't solve most of the problem. I think it's 10% that is going to be listed. So, I mean, it's not controlling shares for anybody. It's a step in the right direction towards privatization. For those who invest, in my opinion, they make some good money. There's a route to cash in that. But in terms of changing and solving the problems, not in my opinion. It's too small a shareholding to change it.
Okay. We'll see how all of this pans out. But it's been interesting getting your thoughts and opinion on the show today.